There's a definitive drop in processed food sales in this country, and it is being linked to these GLP-1 drugs. First, some background. In the middle of last year, a wave of fear came over the food group. These GLP-1s from Eli Lilly and Novo Nordisk were viewed as grim reapers, slashing earnings wherever they went. We figured food sales would come down, then earnings for supermarkets could get hurt, and at one point, at the height of fear, an analyst tried to assess the impact on aerospace and airlines if more people got thin. It all got pretty darn fanciful, and especially eventually rationality returned, along with buyers for pretty much everything. Now the hysteria is over, but maybe there was real cause for concern. This Cornell study that I like so much took a look at use patterns and concluded that, I'm going to quote here, households with at least one GLP-1 user reduced grocery spending by approximately 6% within 6 months of adoption, end quote. The study goes on to say, quote, given an average monthly grocery expenditure of $630, this translates to an annual reduction of $416 per adopter, end quote. Hey, that is big money for most Americans. The GLP-1 drugs also reduce food consumed away from home, with breakfast spending declining by nearly 4%, dinner down 6%, fast food particularly hard hit. I think you might see something about this when grocery chain Albertsons reports next Wednesday. At the very least, the supermarket's management should have to address this report's findings. But it's the packaged food companies themselves that have the most to fear. As the report comments, quote, companies that rely heavily on caloric-dense processed or indulgent foods are likely to face declining demand and need to reassess their product portfolio to remain competitive, end quote. In fact, the Cornell report directly posits that sales weakness from Kraft Heinz and Campbell's might be attributed to the GLP-1s. According to the report, the food companies can protect themselves by changing package sizes, offering smaller portions, producing foods that are healthier and more convenient. I think that makes sense, but in the end, these companies are all about processed foods. Come on. It's awfully hard for them to change their stripes. Now, lots of investors have turned on the makers of the GLP-1s. Last night, I got a call from someone who complained about how miserably Eli Lilly's stock is done, in large part because he bought it in the 900s. I totally get that. I know the stock's plummeted to the 700s has sickened a great many shareholders. But I think that these drugs have multiple benefits, and their staying power questioned by many negativists may be stronger than the critics think. The pattern seems ingrained already, and the pain the processed foods we're supposed to experience might finally be arriving. To me, it's simple. You should buy one kind of chip that's changing the world, the semiconductors, and avoid another kind of chip, Frito-Lays. It's ironic. We used to regard the foods as safety stocks and the semiconductors as high flyers with huge downside. Now there seems to be nothing safe about the foods, but the semis, lots more staying power than anyone ever thought.
In a world where technological giants continuously strive to etch their names into the annals of innovation, an electrifying buzz surrounds a select group of companies breaching the elusive $3 trillion market cap threshold. This is a rarefied club, signifying not just financial prowess, but a profound impact on global markets and industries. Right now, 3 corporate behemoths have achieved this monumental feat: Apple, Nvidia, and Microsoft, each playing a pivotal role in spearheading the monumental shift towards artificial intelligence, AI, a technology that's reshaping paradigms across various sectors. While Apple confidently leads with around $3.8 trillion, displaying the fruits of its technological dominion and consumer appeal, a fascinating narrative unfolds around Nvidia. This chip-making titan is poised at the cusp of another financial milestone, with many market analysts and industry insiders anticipating it to be the frontrunner in reaching a $4 trillion valuation. Welcome back, everyone, to Investocracy.
Yeah, I think that this correction could last a bit. You've seen the marquee name Nvidia come down. So what I would expect people to do, what I would recommend people to do, is to maybe keep some powder dry. I think these AI infrastructure stocks in particular might see some near-term pressure as folks worry about a digestion in the spending of the hyperscalers on GPUs and other infrastructure gear for data centers. However, I would take the opportunity as a pause that refreshes, and on any significant dip on Nvidia at all, I would probably buy them. But I do think in the near term, this correction could continue, and I see particular weakness echoed in Micron's results last night in all things consumer electronics. Their NAND flash business is doing very poorly, and it's worsening. And think about this. This is flash memory chips that go into smartphones, PCs, cars, and other industrial applications. So that's the bad stuff within semiconductors. The good stuff is all AI related, but even the good stuff, I would hold the phone for a bit. I think you might be able to buy them a bit lower.
I guess that's the question. You're just saying on Nvidia, as long as it keeps going down, what would you buy it at?
I think I'd probably look to find support at the 200-day moving average. I'd also like to get a feed into the news that we won't actually get until the third or fourth week of January on the revised spending plans, if at all, from the AI hyperscalers, the ones that are spending the tens of billions of dollars on infrastructure. And the last
what do you think Paul, what do you think those revised plans look like?
I actually think they will confirm their guidance. These are the deepest of all pockets. And when they say they're going to spend tens of billions of dollars, they typically do it. And then sometimes they actually forecast on the downside and they raise things. So I think we're going to be okay. But I do think that there's going to be some worries, not necessarily by me, but others, that sometime in 25, you will see a digestion of this AI infrastructure spending.
The saga of Nvidia reads like that of a silent giant, quietly revolutionizing not just its specific segment, but potentially altering the entire tech landscape. Historically, Nvidia carved its niche as the enhancement of graphic performance for video games, a segment which alone holds massive commercial potential due to the ever-expanding gaming industry. However, a noteworthy pivot emerged when Nvidia realized that its graphics processing unit, GPU, chipsets were ideally positioned to fuel the burgeoning trend of generative AI. As AI evolved into a megatrend, signaling a new era of technological advancement, Nvidia found itself in a prime position with nearly unrivaled dominion, effectively securing approximately 90% of the GPU market. This dominance is credited not only to its cutting-edge Hopper GPU, but also to strategic foresight and innovation, which propelled Nvidia's revenue and profits to unparalleled heights in recent years. This technology's capacity for parallel processing makes it invaluable for AI applications, solidifying Nvidia's status as a leader in AI hardware. Speak the name Blackwell to any market analyst, and you're likely to hear echoes of optimism regarding Nvidia's journey. As per industry expert Beth Kindig, the company's Blackwell GPU architecture is projected to take center stage, capturing the market's attention with a projected tripling in production volume from Q4 to the first quarter of 2025. Such accelerated production is likely a bellwether for Nvidia's promising growth trajectory. This development rivals even the myths of Wall Street folklore, applying sophisticated technology strategies to secure its future in a competitive market. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
Let's say at the start, it's down a little bit today because expectations were sky high. But this was a blockbuster quarter by Nvidia, right? What's clear to me now, and what I think the biggest takeaway from the call, is that the world runs on Nvidia. As Jensen said, AI is in full swing. He said this is a multi-year event. This is not just about training AI. This is about moving all the world's x86 architecture, all the applications that run on CPUs are going to be rebuilt over the course of the next 3 or 4 years on GPUs that are running machine learning. So I think that the market is going to have to digest that this just isn't about training clusters in 2025. This is about GPU data centers that are going to be built in 26, in 27. And so for us, our numbers came up. You saw that I think 10 sell-side analysts took up their price targets for the stock. We were buying it pre-market when it was down
Oh, you're
today.
buying it this morning.
Yeah. So, I think it was a blockbuster report. And I think, it's clear to me that the Intels of the world are going to continue to lose share, and the Nvidias of the world are going to continue to gain share. And if you want to bet on the tailwinds associated with AI, you have to have Nvidia in your portfolio.
Okay, so it's
This comes on the back of a commendable 170% share price surge in 2024. Nvidia has experienced recent pauses in its upward climb, heralded as an indicator of the long-term market anticipation over Blackwell's launch. This advanced architecture is crucial to Nvidia's continued reign and expansion in the chip industry, promising new capabilities that could further integrate AI into everyday technology. While Apple and Microsoft each wield formidable catalysts, like the Apple Intelligence-equipped iPhone 16 and the robust Azure cloud computing infrastructure respectively, Nvidia's prospects noticeably sparkle with its strategy and innovation. With its current market cap at $3.3 trillion, Nvidia must navigate a prudent 21% growth journey to crest the coveted $4 trillion summit. However, it is important to note that Nvidia executed a significant 10-for-1 stock split earlier in 2024. This move amplified its outstanding shares, indicating strategic foresight designed to set a steadier course for growth rather than a hurried ascent. Success hinges on Nvidia's ability to showcase sustained growth, particularly in its Blackwell lineup and data center sectors, which are likely to reflect in incremental stock movements throughout 2025. This steady, calculated growth indicates strategic patience, a rare trait in a time of frenzied market actions. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
The stock started the year at 49 bucks a share, 50 bucks a share. Today we're at 145 or something. The asymmetry is closed, and part of the reason for that is everybody had this wall of worry, right? Custom ASICs, Amazon's going to have their own Trainium chip. I said on our recent BG2 podcast, of course they're going to use Trainium. It's a cheaper price solution for certain customers, but they also, Jassy has said he's going to buy as much NVIDIA as he can get his hands on for as far as the eye can see. They know the world runs on NVIDIA. So, listen, when we look at our price target for NVIDIA next year, it's up 30%, not up 100% like it was at the start of 2023 or at the start of 2024. So when you ask me as a portfolio manager, we took down the size of our position. It was a really outlier position for us to start the year. It was a normal sized position for us coming into this quarter, and we're adding a little on the pullback in this quarter, but we think it's going to be a great compounder and a great bet on not only AI, but also on the replacement, the move from x86 to GPU-based data centers for the next several years.
Okay,
Nvidia stands at a pivotal point infused with intriguing possibilities, holding what many believe to be the magic lamp of AI possibilities. Its promising Blackwell architecture transcends mere anticipation, possessing the potential to redefine market positioning and catalyze Nvidia's trajectory towards the prestigious $4 trillion market echelon. If these forecasts bear fruit, those investing in Nvidia could witness not just formidable returns, but be part of a pioneering chapter in tech evolution, marking a period where technology fundamentally alters the way industries operate. As Nvidia fortifies its presence in AI with groundbreaking initiatives, investors might well find this moment opportune to consider not just Nvidia's current valuation, but its enriching promise of future innovations. The semiconductor giant's intricate dance with AI reflects a broader shift towards a future steeped in sophisticated technologies that can address global challenges, enhance consumer experiences, and redefine economic landscapes. What are your thoughts on this unfolding financial odyssey? And finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.